Hey everybody, this is Brad with Tax Defense Ohio and Realty Income Tax Advisors. Hope your new year's off to a good start. One thing I wanted to address before tax season gets up and running is for real estate agents and self-employed people in particular is the self-employment tax. So self-employment tax is the tax that individuals that have a Schedule C, their own business, they're real estate agents, or they do landscaping. If you have that kind of business arrangement, you have to pay what's called self-employment tax, and that is one half of the Social Security and Medicare is paid by the employer, and one half is paid by the individual. Now, if you have a 9 to 5 job at a corporation, you get paid every 2 weeks. You, the employee, pay half of that. The employer pays the other half. With self-employment tax, like our real estate agent, for example, or a landscaper, they pay both halves. So you're paying twice. You're paying 15.2%. So for a lot of self-employed people, the self-employment tax, equal or exceeds your actual income tax. So there's a couple strategies you can use to lower your self-employment tax. The best one really is an S corporation. So what an S corp is, it's a business entity that you set up. A lot of people just take an LLC and they use an accountant or attorney like us to switch it with the IRS. So it's called an S corporation. And then the S corp pays you a smaller salary than you get now. So for instance, to make the math easy, let's say $100,000 is what you make, and you're a real estate agent, and that's your net commissions after your expenses. Instead of just taking that all in checks or debits throughout the year, what you can do is have your S corps give you a W-2 for, let's say, $35,000, and take the other $65,000 as what's called distributions. So you still get paid the same 100,000, except you're not paying self-employment tax on that other 65,000. You're not paying that 15.2% on the other 65,000. You're just paying it on the 35,000 that you W-2 yourself. So that is how to get around, or at least minimize as best you can lawfully, your self-employment tax. You have to pay yourself a reasonable salary. And there's some court cases that go back and kind of give a general guideline of what a reasonable salary should be. But in general, the average person with an S corp can expect to save $6 or $7, $8,000 in the $100,000 area by switching to an S corp. So it depends on your circumstances, how your business is structured, and things like that. But S corp, best way to lower that self-employment tax. Our average new client probably saves about $7,500 a year switching to an S corp. That's $7,500 in tax, not just $7,500 in deductions. So I go through that in my new book for real estate agents, the Real Estate Agent's Ultimate Tax Guide, which you can buy on Amazon. And of course, our clients, if you come in and get your taxes done, we'll give you a copy free. Thanks.